Oh man, so Bitcoin continues in the red, shaken by Nancy Pelosi's decision to be the first senior US representative to head to Taiwan since 1997. That is keeping the markets risk off. The S&P and the Nasdaq opened up in the red territory, trying to recover, and Bitcoin trying to follow suit. We're having a risk off day to day, but we're also going to zoom out to look at what are the transactions showing, what are the on-chain metrics showing in terms of, are we actually seeing this recovery, or is this just a relief rally, which we've been discussing. I'm also going to be talking about my mindset around how I think about my portfolio and investments. So make sure you hit up the like button. Don't forget to subscribe. As you can see on the screen, China, Taiwan, tension spike, and you guys can just search Twitter. I mean, it's getting crazy out there. People are tracking her flight. Apparently, the Chinese military are mobilizing. All of this means from an investment point of view, we have a red day, right? Risk is severely off right now, and you can see Dow Jones trying to recover. I mean, these indices were down as 1.5% a little while ago, trying to recover intraday. Let's head on over to the charts. You can see here the S&P opened up, gapped all the way down here, and has had a few hours to try recover here with green candles here on the hourly chart. More importantly, if we take a look at the VIX, that is the volatility index, and you can see this spiking here. If I zoom out, you'll get a perspective of this spike from the bottoms here. Nice big spike in volatility as investors and traders quickly rotate risk off, not knowing how the geopolitical issue can emerge. Also had a bunch of earnings. You had BP beating earnings. You had Uber beating revenue forecasts as well, and doing pretty well on EBITDA. You get AMD, PayPal, Airbnb, Starbucks after the close. Intraday, you've got Fed Bullard, who will be speaking, as well as Mester. So we need to listen out to what these Fed officials say. Remember, the whole premise around the market rally we had last week was this hopium around the fact that we may see less than 75 basis points from September the 21st onwards. So that is what we need to see and hear from these Fed officials. If they come out and say negative things, or that, you know, we're heading into a deep recession, markets will fall. If they say positive things like, yep, the labor market is really strong, this is not a normal recession, then we can see the markets propped up and rallying. Other interesting news today before we get into the Bitcoin chart, you've also got Ethereum news. Coinbase Prime adding Ethereum staking for US institutional clients. So now institutional clients can not only have a custody solution with Coinbase, but it's super easy for them to stake as well. So Ethereum now added to the list, which includes Solana, Polkadot, Cosmos, Tezos, and Cello. So yeah, really interesting to see that's going to be a huge driver for Ethereum now that institutional clients can easily use this to delve into crypto. Also, some news on Celsius Network. Custody clients tap lawyer to reclaim $180 million. The account holders represent 4% of the assets locked up at the bankrupt crypto lender. This just doesn't get better, right? And this is part of the problem when you head into bankruptcy proceedings. Those creditors with the biggest clout, with the biggest pull, you always see it, but they'll never let you hear about it. They tend to get their money first, so to speak, and we saw that with Terra Luna, and we still to this day don't know where that money went and who got access to the reserve fund, and this is the worrying sign for Celsius investors as well. Also, let's head straight over to Fit Ingredient next. You can see we've notched down to 31. Now, this is because we've lost that key level of 24, right? You can see if we head back over to the Bitcoin chart, the Fit Ingredients is notching down because we've come so far down from that 24K level and people getting worried. You can see a little bit of recovery here over the last hour candle here. This is just responding to the S&P trying to fight back here on the day. Now, this could be good news, right? If we can create any form of higher low, that is really good for Bitcoin. So any turn here or here, or even if it needs to come all the way down to 22K, that's absolutely fine. As long as it creates a higher low, that is going to maintain the uptrend, and you can do this and then go post a higher high and maintain this uptrend. What gets worrying is if we lose this trend line or lose the 22K and start forming this M pattern, which I was warning of in this morning's video, and start breaking to the downside back into our channel. That would mean our relief rally is short-lived and back to our channel, right? Back to lower price points. So for this relief rally to sustain, for us to have any hope of trying to work our way back up to 30,000, we need to create that higher low. We need to squeeze our way through 24,000. It'll be the third time we try here in terms of a major peak, and then we got to push through and start working our way towards 30. Let's bring out the hourly EMA ribbon as well, and you can see on the hourly we're below, but let's zoom out to the 4 hourly, and this is where you can see, let me just get nice and zoomed in here. And this is where you can see we did flip and lose our 4 hourly EMA ribbon. Flipping over to the daily, this is where we're getting the back test on our daily EMA ribbon. This is really important that Bitcoin holds this level. And you can see the bottom of the EMA ribbon sits at 22,300. So once we start falling to below this trend line and entering back into our channel, we've all but lost our daily ribbon, right? So if we close below this 22,400 type range, we will be flipping back bearish on our daily EMA ribbon, which we worked so hard to claim, right? If you remember, this is where we claimed it. We had a big candle, another candle closing above it. But ever since then, we've just lost momentum, got rejected by 24K again, and back into our EMA ribbon. Now, what are the on-chain metrics saying? Well, there's some interesting on-chain metrics to share with you. And the first one is the number of active addresses. And what we want to look at here is you have your green period, which is your bull market influx, okay? Obviously, the price is going up, the number of active addresses are going up. Then you have your demand destruction. This is when Bitcoin fell from 64,000 down to 29 in the summer of 2021. That was demand destruction, right? Number of active addresses plummets to a low. Then the October to November period, we saw Bitcoin start recovering back up towards 69, creating a new all-time high, and the addresses ran, but it didn't follow through, right? It didn't kind of have the same impetus, even though we created a new all-time high. And we've covered this on the channel before. What happened last year is you had your first huge surge up to 64. It came down to 21, but on this run up to 69, you saw that long-term holders were using this to exit some of their positions. So you saw that new entrants were coming into the market slightly more naive, and they were buying the top. And it's those guys that are feeling the pain right now and are transitioning across to short-term holders. Okay, so we're seeing that redistribution. I've covered that off in my video earlier, where we cover off some of the redistribution from long-term, from certain short-term holders to new short-term holders with a lower cost basis. Now, the bit I wanted to point out here was this. We have low market demand profile. So what we're seeing is the number of active addresses are declining. We haven't seen this uptick. Okay, if we see a nice breakout of trend here, similar to how you kind of did there, then that could justify that, you know, we're seeing a bit of a rally movement. We're seeing some excitement. Number of active addresses are going up. If we then superimpose that also to look at also the transactions per second, similar pattern, right? We've got this bit of a bear market recovery, which is where you have your huge demand destruction to the bottom, you bear market recover, so huge demand destruction to the bottom, bear market recover, and we're almost in this phase here, which is the same phase you saw there in the previous bear market. So could there be another low to come? Either way, it's not suggesting that this is recovering as quickly as we would like for a big run up to 69. And this is why, you know, when a lot of people are saying, oh, you're just being bearish, I have to be to an extent, because I have to say, look, the data is telling me we are not in this movement. We do not have these types of on-chain metrics to suggest we can run to all-time highs. I can facilitate and I can accept a run up to 28, 29, 30 within reason as a relief rally, but even then, that's under the controls of the bears on the weekly time frame. And the on-chain metrics are backing that up, as you can see here. Now, what am I thinking of in terms of my portfolio? Like I said to you guys, in terms of my portfolio, I like to keep it very, very simple. And the way I do it is I bolt on more higher risk plays as we go into the bull run. Okay, so I'm not going to be, you won't see me going all in on crazy low market cap coins right now. I like to focus on Bitcoin, on Ethereum, and then as the market starts to recover, you'll see me ladder into more and more riskier plays in terms of my layer one solutions. Now, the way I split my portfolio is I have a big portion in Bitcoin, a decent chunk in Ethereum, and then I have a segment which I specify just for my layer one solutions. And that's where I'm focused on right now. Bitcoin, Ethereum, and maximum layer one solutions, right? That's what I want to be focused on, because my belief is when the market recovers, the funds are going to rotate in that order. Bitcoin, then Ethereum with the merge. Of course, you need to be in Ethereum, and then layer one solutions, good ones, right? So making sure you're stacked up in the higher market cap layer one solutions and a few riskier ones, which are going to give you that higher market cap to reward type perspective which you're looking for in your portfolio. That's what I'm thinking about right now. Am I wasting bandwidth on gaming projects? No. Will I maybe lose some opportunities? Yes, but I can't catch them all, right? Am I focusing on crazy DeFi plays right now? Not particularly. Am I focused on NFT projects? Not particularly, but there will come a time and a place for all of those, and I will talk about them when I'm focused to assigning bandwidth on those projects. Right now, I want to stay focused on making sure I take the most of these low price opportunities to accumulate my Bitcoin, Ethereum, layer one solutions, and make sure I have no regret on the next run up that I don't have my allocations in those. In terms of the other lower market cap projects, you'll have plenty of time to accumulate that. Like I'm saying, the on-chain metrics do not show that we're rotating out to all-time highs anytime soon. And the macroeconomics aren't showing that either. We haven't seen inflation come down. We've just had a higher reading, right? We just had a higher interest rate hike. So yes, we can take a little bit of hopium that maybe this is the worst, but until evidence shows that inflation is coming down, until we see evidence of the Fed talking about a potential reduction in their rate hike, we can't get super excited and run ahead of the news. So really important that we're patient, we're pragmatic, we keep our emotions to the side. Loads of people will be trying to FOMO you, but at the same time, this is very important. I'm speaking from my perspective based on my portfolio. My allocations are very particular. I held my positions and I built up my positions in previous bull runs, and I held through the highs of 69,000 into the lows. I was dollar cost averaging in, so I'm 85% in the market. Okay, so I have no need to FOMO into this market with my last 15% now. I'm being very selective, waiting for the pullbacks, waiting for good red days to just assign a little bit more, assign a little bit more, assign a little bit more. If I wasn't in the market, I would be a little bit more aggressive right now. I would not feel comfortable being less than 85% in the market, my personal choice, and I explain exactly why in this video. So go watch that video, hit up the like button there as well, comment there, and let me know what you think. Thanks for watching, guys, and I'll see you in the next one.